So we got that out of the way, and I like to do any sort of, moves like that you guys are making. I feel that's unique to us. So thanks for doing that. I do want to get to the markets, though, Jenny, in this debate, which I think is the most important right now. It's this don't fight the Fed versus don't fight the tape. The Bears will say the one thing. The Bulls will suggest the other. What side are you on?
This is such a hard year for me because I want to be on both sides. I don't want to fight the Fed, and I also don't want to fight the tape. So I am fully invested, but cautiously. I have a little bit of cash, and so I'm trying to not fight the Fed by being very, very patient. So when I was on the other day, I said one of the companies that we've been researching is Stanley Black & Decker, for example. And so I am so convinced that I cannot fight the Fed, or right, that the Fed's going to actually do something and help us pull the market back at some point, and then I'll get in at a cheaper price. At the same time, I don't want to fight the tape, which is why I'm mostly fully invested. I think being patient this year is the winning strategy because I still think we're generally range bound, maybe with a 10% plus and minus range on that. And if that's the case, you're going to get opportunities along the way. But I'll tell you, it's really hard to sit here this year and not be doing things. It's been 3-4 years of huge volatility where you need to move quickly and you get opportunities all the time. And this year, I think you just sit there and you twiddle your thumbs and, you try just to let what you have in the portfolio bake. So I'm sorry to give you a lame answer, but I'm trying to do both and take advantage of the fact that both are realistic things to do.
The real question is, are the Bulls delusional, right? Based on what the Fed continues to say, Mester, right, Steve, today. Jonathan Krinsky asked the question regarding a turning point for the market. Are equities looking past the rate moves and potential impacts from them, he asks today in a new note, or are they being complacent? And ultimately, that leads to a reversion to the downside. I mean, how do you assess the very debate, don't fight the Fed versus don't fight the tape, because they're telling two different stories?
On the first order, I wonder, has the market really interpreted the Fed correctly, the stock market? Because the bond market, I think, I know the bond market and the stock market are very much in line. The bond market and the Fed are very much in line.
And I'm specifically talking about the equity market.
I've got a chart that really, I don't know if it answers the question, but it shows perhaps the dissonance. Since January 18th, which was the low yield on the Fed funds futures contract for end of the year 2023, we have added about 70 basis points to the year-end funds rate. What do you think the stock market's done in that period of time since January 18th? $5. You can't see it. $5. Subway, right? That's a Subway commercial, right? It's added 5% in that period of time. So you could say it could have been 20. There's the mark. 434 now, 504. That's 70. Over that period of time, the market's added 5%. Is it ignoring it? You tell me. I'll tell you what I think I know. I think that you've had decent earnings. You've had strong job growth. You've had somewhat declining inflation, not as fast as hoped. But take a look now at what's happened to the rapid update, Scott. That retail sales report, a complete rethink of the first quarter GDP. We did a rapid update on January 23rd, a full rapid update. This is a rapid update. We just did the current quarter. We're at 0.19%. You're going to add 1.3% of that because the retail sales numbers were hotter and higher. What does that mean for the stock market? More earnings, more spending, more stuff. Now, we could talk about the debt number.
What is that? Hold on. What you say, what does that mean for the stock market? I've put it back to you. What does it mean for the Fed? UBS, they add a May rate hike to the projection now. They're talking about potentially June as well. Morgan Stanley, 25 in March, 25 in May as well. Now, June all of a sudden is a wild card.
May is yesterday's story. Right, if you're adding May, you're late.
So
we're adding June now. That's where we're at.
And based on your reporting.
And you can look at the stock market. You can listen to my reporting. Either way you look at it, the debate right now is whether or not we're in June. We now have a 50% probability of a June rate hike in the cards right now. What does that mean? It means that the more hawkish wing of the Fed is sort of winning this argument in the sense that they were in that 540 camp. So what is that?
Just as we discussed this the other day, just as Brainerd is exit stage left.
Yeah.
A Dove has left the building.
Yeah.
It makes what you're talking about maybe more plausible because the counter argument loses a critical voice.
I think it loses a critical voice, but I think the story, Scott, is there have been no doves in the inflation foxholes. Think about the people we're talking about. Mary Daly, Bostic, I guess you could go either way with, but Susan Collins,
Kashkari went 180.
Kashkari
from Dove to Hawk.
Can you do more than a 180? Because that's what Kashkari did.
But here's what I want to
He did
know.
More than a 180.
So